time. I apologize to the 4 or 5 of you that joined a few minutes ago. Don't know why. YouTube kicked me out, so we're doing it again. Again, today is Wednesday, October 5th, and this is your daily financial news. A lot of very important stuff going on, but before we get started, let's congratulate some One Rental at a Time fans for doing the work. First, Lisa, congratulations for getting your deal. And then Adam, congratulations. You are getting 3 deals. The cards will go out again. Adam and Lisa, thank you very much for watching, following, doing the work, getting your great deal. I am proud of you. Congratulations. Those will go out today. All right, folks, let's start at the bottom of the list, which I'm not even sure you could see. You cannot. It says Fed pivot. What is it? The last couple of days, if you've been following the stock market, you had a 1,500 point gain. I believe a lot of that was because the 10-year note was falling. Why was the 10-year note falling? Because everybody thinks the Fed is going to pivot. I don't know what people are looking at, but let's at least define what a Fed pivot is. This is important because as I read articles, I believe people are hoping, and I do use the word hope on purpose. They are hoping for a Fed pivot. I believe there are 3 versions of the Fed pivot. 1, the classic Cathie Wood, Elon Musk, the Fed must cut rates. I think most of us will agree that the chances of the Fed cutting rates are as close to 0 as humanly possible, at least first. They may eventually get to rate cuts, but I believe there are 2 steps before there. The step before a rate cut, in my opinion, is a pause. We have a Fed meeting and nothing happens. No ups, no downs. I believe that is far more likely than a rate cut. However, I don't think it is likely, if that makes sense. Rate cut, pause. Now, here is the tricky one. This is the one that the Fed could surprise us. I am not currently calling it, but it is absolutely possible. And let me tell you this right now. If the Fed does this, the market will go bananas. The market will smell blood. And that is quite simply, if the Fed does anything except hit us with 75 basis points November 1st, for example, if the Fed pulls an Australian central bank, the stock market will be off to the races. What happened in Australia? I think we talked about it yesterday. It might have been the day before. The Australian stock market, the Australian bond market, was ready for a 75% basis raise. The central bank gave them 50. I believe that of the 3 scenarios is the most likely Fed pivot. And I want to be clear. The Fed is setting us up for 75. If they give us 50, I will agree with you. That is a Fed pivot. Now, to be clear, if I were to put percentages on November 1st, I believe there is 0% chance of rate cuts. I believe there is 0% chance of doing nothing. I think there is 10% chance of a 50, and thus 90% chance of 75. But I think understanding a Fed pivot, because everybody is not using the word or the phrase the same way, I would argue that there is a lot of hopium out there by Cathie Wood and Elon Musk and others that want a rate cut or at least a rate pause. As I've just shared, I don't think either of those are likely come November 1st. I believe a pause may happen in Q1. I think we get a rate increase in November and another one December 14th. Maybe we get a pause in Q1, but we shall see what we see. All right, next up, mortgage demand. We saw this coming, right? We talked about rates going over 7%. We talked about affordability crashing. You have had multiple experts and millionaires on this channel tell you what happened when rates hit 6. Well, when rates hit 7, it got worse. Mortgage demand down 14% week on week. Now, in fairness, part of the country, Florida, was kind of busy dealing with something else. So some of that large week on week drop is because of Hurricane Ian. But let's be clear, 7% rates crush demand. Refi demand now down 86% year on year, and purchase demand now down 37% year on year. Folks, this is demand destruction. We are seeing more and more people talk about supply destruction. We are in a housing depression. Let's see where we are March 15th. It is sort of coming through as expected. It's not going to be fun. It's not going to be pleasant. There will be motivated sellers out there. Keep doing the work. Remember, opportunity hides behind fear. So do the work. Nothing but great deals like Adam and Lisa did. Write great offers. If they say no, wait. Follow up. Deals are in the follow-up. If a seller agrees to my first price, I paid too much. Think about it. Next, I don't know if you've heard this, but apparently the United States government is thinking about banning the export of gas. Thinking about banning the export of gas. Again, gas prices are starting going up. If you're in California with me, we are over $6 again. Not good. And we haven't even replenished the reserve yet, and winter, and all these things. We are going to see oil and energy rise, and then that will hurt inflation, so on and so forth. But again, we are apparently talking about potentially, it's just discussions, can we ban the export of oil? Mark Zandi, a well-known economist, works for Moody's Analytics, I believe, is now out calling for a housing crash, a national housing crash. And to be clear, a crash is 20% or more. Mark Zandi has changed his opinion seemingly every week, and now is saying if the United States has a recession, which I think you and I both agree is coming, that we will see a national housing crash to the tune of 20%. To which I say, I hope he's right, but I, of course, think he is wrong. A lot of people are saying, Michael, if we have demand destruction, which you admit is happening, we have to have price decreases. Well, here is an analogy for you. If you are Target and you have a bunch of TVs on the shelf and people aren't buying them, what do? You discount the TVs. This is what people come to me and say, Michael, you're wrong. Where did you get your degree? Return the degree because you're an idiot. To which I say, aha, you are only looking at one side of the equation, my friend. What happens if those TVs don't show up? What happens if there's no TVs on the shelf? It doesn't matter if nobody wants a TV. There's none there to sell. This is why I am being very clear. Phase 2, which started September 15th and will run till March 15th of 2023, is the supply destruction that we have not seen since 1980 and 1981. Very few people have gone back and read articles or bought books that are out of print that talk about the early 80s. We are in that vortex right now. And Mark Zandi, I believe you were wrong. Much like you were wrong when you failed to call the last housing crash. I think you are so burned by being wrong last time that you are seeking to be right, and you will be wrong again, in my very humble opinion. Good news is, my opinion is very clear. I've given you all the metrics to follow. Let's see what happens. Apple. I've actually heard two things about Apple. With Apple, if you don't know, they're a very, 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 very private company. So a lot of Apple articles reference unnamed sources. They're very, very tight-lipped. Apparently, I don't know if you've seen it, but there's talk about building iPhones in India. I read that last week. Today, there's an article about EarPods, or whatever these are called, these earphone things, and their Beats headphones being made in India. If this is true, is it yet a further sign that people are turning away from China, their zero COVID policy? China's economy is at least in a recession, could be in a depression. Leaders have constantly made bad choices. Could production move to India? I think it is very, very possible. ADP report. Folks, I haven't really checked the market this morning. I'm guessing it's down. I did check rates. Rates are up. ADP report is our first look at September jobs. The big number is Friday. Friday's numbers will be market moving one way or another. ADP report came out hot. ADP report is private payrolls. Expectation was 200,000, came in at 208, and they revised up August. Again, whether you like it or not, whether it's fair or not, the Fed wants jobs to go down. They do not want to see the strong jobs market. They want to cause pain. That's where the pain will come from first. And we get another look at unemployment numbers tomorrow, every Thursday. So not only was the job market stronger than expected, 208 versus 200, here is the real, capital letters, bold problem. Wages. And this is why I believe core CPI is going to be stickier and worse for years to come. Wages. Wages in the month of September went up 7.8%. The ADP report, the jobs report on Friday is expecting 5.1. ADP just reported 7.8. That is hot, hot, hot. That's what we have to watch. So Friday, let me know what you think. There are three numbers to look at. Friday jobs number. Expectations are 250,000 jobs. I'm taking the over. Unemployment rate is expected to stay constant at 3.7. I'm actually going to say it goes up to 3.8, and that is because more people are coming off the sidelines. We shall see if I'm right. And I believe wages, currently calling 5.1, I think we'll call 5.4. Let me write these down so you can hold me accountable on Friday. 250 plus 3.8 and 5.3. All right. So I have a little whiteboard over here. I track my numbers. We'll see what we do on Friday, see how we are doing. So again, right or wrong, the Fed's coming after jobs. Jobs number came out hot. Rates are up. It's just where we are. So a couple of quick things. I've talked about a super exciting November 12th Saturday session in Fresno, California. I'm meeting with the team later today at 3 o'clock. I believe we finally have a location. This location will hold 600 people. My hope is at least half of those 600 are One Rental at a Time fans. There is no doubt that Jason and Stratton and Dean and Ty will pull in theirs. I'm hoping One Rental at a Time shows out. We've already told you that Pace and Jameel are headlining it. What if I told you Dion from Dion Talk will be there? And then the third speaker will be Henry Washington. Been on my channel. I believe he is a featured blogger for Bigger Pockets. Not to mention the other folks that you've already heard of, myself, Jason, and others. We are all going to be there. I am hoping we've locked the location. We will get an Eventbrite link set up. I will start attaching it. That is probably tomorrow. I will share the outline. I hope to see 300 or more One Rental at a Time fans there. It should be a blast. Again, Fresno, California, Saturday, November 12th. And then finally, a lot of you asked yesterday in the Daily Financial News for me to generate a Bigger Pockets presentation. I am going to do that. I want to be clear. This is not a presentation to kind of call shots at Bigger Pockets. That's not what this is. What it is, hey, if One Rental at a Time was asked to present, what would I present? Now, I will take shots at Burr. I will take shots at syndication, but this is not, I don't want to set expectations wrong. This is not Mike Zuber taking shots at Bigger Pockets. This is Mike Zuber being himself, telling you what works, what doesn't work, what is risk, what is not risk, how to take advantage of the next 2 years. I started working on the presentation. I was so excited. I got up an extra hour early today. So what I'm going to do for this presentation is it will be 9 a.m. Saturday. That is where we usually do our deep dives. And unlike every other deep dive, I am going to send the link out to all students. Usually it's only been my students of how to get started One Rental at a Time, my paid course. This time, because it's just me, I'm going to send it to everybody in my paid course and my free course. Why not? Let's send it to everyone. And then, of course, I will post it right here on YouTube Sunday morning. So again, folks, Wednesday, October 5th. I hope you have an amazing day. Like, subscribe, comment. We're working our way to 39,000. We're about 410 amazing people away from 39,000. Like, subscribe, comment.